Hi and welcome to Swissquote's Daily Market Talk. It's Friday, May 9th. The trade deal between the US and the UK improved sentiment across the global financial markets, leading to a rebound in equities and in the US dollar and a retreat in gold and the Swiss franc. Now, high-profile American and Chinese officials are due to meet in Geneva this weekend to hopefully further de-escalate tensions between the two giants. But when we dive into the US-UK deal, the outcome is not that exceptional. So we will talk about all that and more. But before we do, please note that opinions are my own and this is not financial advice. So we don't only have a new pope this week, but we also have a first trade deal in Trump's global trade war, and that between the United Kingdom and the United States. And because the deal was brought with a lot of enthusiasm and a lot of capital letters from Donald Trump, it kind of pumped up the sentiment among investors and made a bigger deal of this US-UK deal than what it really was, in my opinion. I mean, the fact that the two countries could agree on a few points is obviously a very, very good start. But the UK entered in negotiations with a tariff rate of around 10% and left the table with a tariff rate of 10%. So there wasn't a change there. Sure, the tariffs on cars were pulled lower from 27.5% to 10%, leading to an almost 14% jump in Aston Martin. Then Rolls-Royce's plane engines are exempt from these tariffs against a British Airlines pledge to buy $10 billion worth of planes from Boeing. So Rolls-Royce jumped by more than 3.5% on the news as well. And the tariffs on the UK still will be cut to zero, which is great news, while British farmers will benefit from tariff-free quotas versus the same treat for the US farmers. And the two countries will continue to work on a digital agreement. But the 10% universal tariffs remain. So yes, it is a deal, but I'm not sure that it is a big deal, and that's going to be the same for the others. So one person at Axios even said that the UK was the low-hanging fruit on the trade deals and that the negotiations won't be as simple with the other nations. We will see what happens. It's difficult to say. The futures, though, this morning are slightly in the positive territory, hinting that sentiment is still positive. Now, the news of a deal between the US and the UK resonated positively across the global financial markets. Mostly yesterday, we saw that the major US indices extended their gains despite a sell-off in US treasuries that actually sent the US 10-year yield back to the 4.40% level yesterday. Maybe, but just maybe, a part of that optimism was also explained by a strong FOMO, so the fear of missing out a rally after Donald Trump posted, "Go out and buy stocks now." But enthusiasm was certainly dented by questions regarding the greatness of the UK and US deal, the challenges that lie ahead with the other countries, and this optimism remains quite fragile in my opinion. In the FX space, the dollar index rebounded yesterday and rebounded strongly to an almost 1-month high level. The euro dollar tumbled to 1.12 level, the minor 23.6% Fibonacci retracement on year-to-date rally, and consolidates near this level this morning at the time I'm talking here, while cable is preparing to test the 1.32 level and the dollar franc rally to the highest levels that we've seen in a month. On the back of these positiveness and optimism around the trade deal as a suggestion of how the markets would react to further improvement in the tariff talks. Now, note, however, that despite the strong gains that we saw in some sectors, the British FTSE 100 index still closed yesterday's trading session in the negative. Well, this negativeness was partly due to a hawkish interest rate cut from the Bank of England yesterday, where two MPC members actually refrained from willing to cut the interest rates altogether due to the uncertainties regarding regarding the inflation's trajectory in the coming months due to the tariff uncertainty. It was partly due to AstraZeneca's shedding 270 points alone from the index yesterday, and partly due to losses in miners as copper prices extended losses for the third straight session on fears of slowing China due to the trade tensions, and gold comes under pressure as well under the threat of de-escalation in global trade tensions. Bitcoin, on the other hand, which is a proxy for Donald Trump and his trade policies, rallied more than 6% yesterday to surpass the $100,000 psychological level, and we are near the $102,000 per coin level at the time I'm talking here this morning. In summary, yesterday's price action suggests that investors can't wait for the good news to flow in and react positively, even though the news are not necessarily exceptional, because the way that they're served to us are, and apparently, well, all that matters, and they are served in quite a fantastic way, to be honest with you. Now, all eyes are on the first in-person meeting between the US and Chinese high-level, high-profile officials this weekend in Geneva to talk about tariffs. Now, note that the goal of this meeting is not to seal a trade deal between the two, which will probably take months, if not years, to come, but to de-escalate the tensions between the two giant countries, and who knows, maybe, but just maybe, to give each other a period of grace, a period of pause to the high tariffs that they impose to each other. Now, the fact that the US insisted big time on their willingness to talk to the Chinese, who kept a poker face during the escalation period, hints that the talks could go well, but it is impossible to tell, obviously, what will happen and how the meeting will go. In the best case scenario, the talks will go well and the two countries will commit to find a reasonable deal with each other, and the markets rally with joy. On Monday's open, the US dollar further rebounds, and gold and the Swiss franc retreat. So this is the best case scenario. Or talks don't go according to the plan. Donald Trump just says something that he should not say, and the Chinese are not happy, and we wake up to another hectic week of trading with global sell-off in equities and further weakness in the US dollar, and potentially a rebound in gold prices and a rebound in the Swiss franc. So pick your side, guys. I think it's a 60-40% chance for good versus the bad vibes that we are going to see in this US-China meeting of this weekend. In the energy space, the week ends on a much better note than how it started. The barrel of US crude is back to the $60 per barrel level this morning after an initial plunge to $55 per barrel mark on Monday. Remember, following the weekend news of last weekend that OPEC accelerates its plans to restore output for reasons that remain obscure to many, but note that whatever the reasons are, the medium-term outlook for oil prices remains comfortably negative on higher supply and lower global demand prospects. So the price rallies that we see in oil continue to be interesting top-selling opportunities for a further retreat toward the $50 per barrel target. For the US crude, minor resistance is seen at the $61.75 per barrel level, which is the minor 23.6% Fibonacci retracement on the year-to-date decline, while stronger offers could be found into the 50-day moving average that currently stands near the $64.70 per barrel level and near the $65 per barrel mark. That matches the April peak and the major 38.2% Fibonacci retracement that should distinguish between the actual bearish trend and a medium-term bullish reversal. Now, on a side note, the decline that we see in average oil prices these days are supportive of further consolidation in the energy sector to allow the energy companies to benefit from synergies. As such, the news this week that Shell is looking to buy British Petrol in what would be a historical deal in Europe, one of the biggest actually in Europe, resonated across the energy space, as you certainly heard about it. Now, a combined Shell BP could rival the US giant ExxonMobil, it is said. So it's a big deal. Alas, BP saw limited gains this week in terms of its share price, so it's something to keep an eye on. So this is all for today. I'm İpek Özkardeşkaya and thank you for joining me and thank you for all your beautiful and supportive messages. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again next week. And until then, good day trading and have a lovely weekend.